From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for March 22nd, 2018. Today we're taking a look at the USDJPY, the US dollar, versus the Japanese yen for today's trade analysis. First, it's important to recognize the trend. We have two different trend lines here on the chart. One's a longer trend, one's a shorter trend. One is blue, and you can see that longer trend coming down from the top of the chart. One is black, and it comes from the middle of that blue trend line, right about right here where the pink shaded area is and the black X. Black trend line falling from there down to the lowest point on the chart. As you can see, recently we have been above both the shorter and the longer term trend line. So the question, of course, is, are we going to see a return of that downtrend on a pressure down and testing a historical support level, or are we going to see, now that we're above those trend lines, reversal and this go back up? We haven't really answered that question quite yet, but definitely something that we want to make note of is that the historical trend is quite bearish here for the US yen. Now let's zoom it in a little bit now that we've seen that, and you can see the yellow shaded area at the very bottom of the chart. 105.70, 105.40, clearly a significant support zone, as we've seen multiple challenges of it. I put these black boxes here to really highlight the fact that we have seen multiple challenges of this yellow shaded area. So really there's one of two potential outcomes at this yellow shaded area here. Either it continues the previous trend, breaks through the yellow zone 105.40 and continues to go lower, or this becomes a support reversal point for a rally for the USJPY. We don't know which one of those is going to be yet, because clearly so far for the past couple of months it's had a very difficult time breaking through this yellow shaded area, and we've actually seen more bounces off this yellow zone than we have breaking through it. So at least at the current moment we can't assume it's going to break through that yellow zone because it hasn't been able to do it. We have to take the facts. The facts are we are at support and so far been unable to get through that major support zone. We have also seen the Forex Black Book, since it's been somewhat of a sideways trend and not really falling and not really turning higher, we've seen the Forex Black Book go from red, bearish momentum, to green, bullish momentum, which could be just an indication of that. We've seen the market going somewhat sideways between the pink and the yellow shaded area for quite a long time now, and not really going up or down. It's just kind of going sideways between there. Of course, the pink zone, clearly our current resistance, and we've seen the market challenge there multiple times over the past couple of weeks, and only really on a breakout above that resistance would we look for further reversal to go higher. So we really have to be watchful for the breakout. Below the yellow zone continues the downtrend, above the pink zone turns it into more of a bullish expectation for the US yen. And right now we've just been bouncing around between the pink and the yellow zone. But that may provide us with some intraday opportunities between those two levels until we get some more significant breakout information. Let's go ahead and take it down to the 4-hour time frame. So as we see here, let me squeeze it out here like this. As we see, the market has just been bouncing around. And this black box is really what we want to identify as our area to watch. And that's been since, what? That's March 14 on the left-hand side of that black box. Since we got back underneath it, March 14, we've just been bouncing around in here. Yesterday, of course, interest rate news, which was positive. They raised the interest rates. There's going to be more interest rate changes, but the market viewed the caution of the Fed and as caution for the Fed, and sent the US dollar falling, and that sent this back down towards the yellow shaded area. The question, of course, is that a longer term outlook, or is that just a short-term knee-jerk reaction to that news? At least at this point, we've seen it come down to 105.70 as it has before and found support here. So the question is today, should we buy it or should we sell it? Well, let's just think of risk reward for a moment. What's the potential gain? What's the potential reward for going short? Well, I think we have to assume that we're already there. It's found support into the yellow zone as it has before. So we don't really have a good potential gain right now as long as it's within and above the yellow shaded area. Our actual potential gain is much better when you think about risk versus reward for a long shot back to the pink shaded area. Now, I don't think we have sufficient evidence for that, but definitely that becomes a better risk versus reward for the long than it does for the sell, because so far been capped out into the yellow zone. Now, if it breaks the yellow zone, that changes everything. So risk versus reward simply tells us that buying is better than selling, because buying, your target's the pink zone or higher. Selling, you're already at your potential target. Risk, of course, right now, if you were to buy it, is just under the yellow zone. You don't want it to break the yellow zone. Your risk for selling, much higher, all the way up here above the pink zone. So risk is very high, reward is very low for going short, and it's just the opposite. Risk is lower and reward is higher for going long. So if you really want to base a trade simply on risk reward, then you would be more likely to take a long into the yellow zone and look for it to go back to the pink zone, and knowing your risk is the break underneath. So at least for the day today, don't short, don't go selling on top of the yellow shaded area. I think more likely you're watching for evidence of support and reversal. I would like to see some indication of buying pressure. It could be some sort of candlestick, and I'll just make this blue to represent bullish movement. We need some sort of viewpoint of bullish behavior, some infusion of buy orders to give us some confidence in that. Maybe a little bit of a dip down and a rapid reversal, leaving a hammer candlestick, maybe a bullish engulfing candle. We need something here from the yellow zone telling us there are buyers present and that there's a potential that it could go back up to the pink zone. So that's what I'm waiting on. And of course, clearly a breakdown of the yellow zone changes everything for the US yen today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.